Hello everyone, welcome to my YouTube channel that is SS Account. Today we are going to solve two practical problems on pro rata and rejection with oversubscription. The unit 1, that is issue and forfeiture of shares, reissue of forfeited shares, redemption of preference shares and buyback of shares. This video is part number 16. We have already completed 15 parts on this unit. This is a very interesting and simple concept. This video will be little bit lengthy because here we are going to solve two practical problems on here issue of shares at par with oversubscription, rejection and pro rata allotment, and second problem will be issue of shares at premium with oversubscription, rejection and pro rata allotment. These two problems are here completely different, and the second one is more technical as compared to this first problem. So do watch whole video and make your notes to get better understand. See here, types of problems, we have already covered all these points. Today we are on 13 point, that is issue of shares at par with oversubscription, rejection and pro rata allotment. Okay, fine. Now, see the first practical problem on issue of shares at par with oversubscription and rejection and pro rata allotment. See here, MNC Company Limited issued for public subscription of 2000 equity shares of rupees 1000 each, payable as rupees 300 on application, rupees 200 on allotment, rupees 300 on first call and rupees 200 on final call. Means here this MNC Company Limited issued 2000 equity shares and this 1000 each, this is the face value, and on application it is 300, on allotment 200, on first call 300, on final call it is 200. Means this total will be 1000, that is it is the issue of shares at par. Okay, now applications were received for 3000 shares. Means here company issued 2000 shares but applications received are 3000 shares. Means this is the case of oversubscription. Now see here, very interesting, out of these applications for 600 shares were rejected. Means there is a difference of 1000 shares. Out of these, means 600 shares were rejected and made an allotment on pro rata basis among the remaining applicants. Means here the difference is, here issued 2000 and received are the 3000. Difference is 1000, and from 1000 600 shares were rejected and remaining means 400. Okay, so remaining 400 shares made the allotment on pro rata basis among the remaining applicants. Okay, means here I have told you, here this is the problem, issue of shares at par with oversubscription, and here we are going to solve the rejection entry also, and next one is the pro rata allotment also. So see here, we can see here 600 shares were rejected and remaining means 400 is made allotment on pro rata basis among the remaining applicants. Okay, so the excess applications money on these shares adjusted against allotment money due. Excess means here 400 shares. Okay, till today the company received allotment money and no further calls are made. Pass the journal entries of the transactions of issue of shares. So this is the problem is based on issue of shares at par with oversubscription and rejections and pro rata allotment. Now see the explanation. See here, company issued here 2000 shares. Applications received for 3000 shares, and this is the case of oversubscription. Okay, so has given the face value is here 1000. So this is the printing error, typing error. The face value is here not 100, it is the 1000. See here, you can see here 1000 is the face value. On applications rupees 300, on allotment 200, on first call 300, on final call 200, means total will be here 1000. Here company issued shares at par. Now see here, here excess shares are 1000. Excess means this difference between issued and applications received. So here excess is the 1000 shares. Out of these 600 shares are rejected by the company. See here, applications for 600 shares were rejected. Means here out of these 600 shares are rejected by the company. Okay, so remaining means remaining difference between these two, that is 400 shares adjusted on the basis of pro rata basis, and it is adjusted at the time of allotment money due. This is given in questions here. Excess application money on these shares adjusted against allotment money due. Okay, so this is the explanation of this question. Now see the working note. Okay, fine. So the first working note is the refund, that is rejections. So here 600 shares are rejected and we have to multiply this 600 with application money per share. See here application money per share is the 300. Okay, so 600 multiply with 300. 600 it is the number of shares rejected by the company, and this 300 is the application money per share. So total will be 1,80,000. And second working note is the excess application money adjusted at the allotment. So first we have to take the total amount. Total means applications received, that is 3,000, and rejected minus rejected, that is 600, and issued, that is the 2,000. So total will be here 400, and we have to multiply this 400 with application money, that is 300. So total will be here 1,20,000. Total minus rejected minus issued is equal to excess applications multiply with application money. Okay, now see the journal entries. See here rejected or refund, the entry will be equity share application account debit to bank account, and pro rata basis the entry will be combined entry bank account debit share application account debit to share allotment account. See the journal entries. The first one is applications entry, that is bank account debit to equity share application account, being application money received. So here applications received are 3,000 and on application it is the 300. So the total will be 9 lakh. Okay, so the second transferring entry, that is equity share application account debit to equity share capital account. Okay, so here we have to take this amount, company number of shares issued by the company, that is 2,000 multiply with 300, that is on application money per share is 300. 2,000 multiply with 300, the amount will be here 6 lakh. Okay, being share application money transferred to share capital account. The next entry, that is the third, this entry, rejection entry, that is equity share application account debit to bank account, and we have to write the amount in debit column 1,80,000 and in credit column 1,80,000. This amount is here. We have did here working note, that is 600 number of shares rejected by the company multiply with application money per share, that is 300. Okay, so the total amount is here 1,80,000. Being application money on rejected shares refunded, means this 1,80,000 amount is refunded back to the public. So this is the new entry, that is rejection entry. See the next, that is allotment due entry, equity share allotment account debit to equity share capital account, being share allotment money due. See here amount, that is number of shares issued 2,000 and on allotment that is 200. Okay, so the total amount is here 4 lakh, and same in credit column, that is 4 lakh. And last, that is combined entry bank account debit equity share application account debit to equity share allotment account, being allotment money received and excess application money adjusted. Here first we have to write this amount equity share allotment account, that is 4 lakh as given here. 4 lakh whole amount we have to transfer here first thing. The second one is the equity share application, means this amounts here we have did here calculation, that is total minus rejected minus issued is equal to excess applications multiply with application money, that is 1,20,000. See here, after that write this amount in debit column, that is 1,20,000. Equity share application account debit 1,20,000. After that the balance will be the difference of these two will be transferred here, that is 2,80,000 to bank account. In debit column 2,80,000. Okay, being allotment money received and excess application money is adjusted. So this is the combined entry here. This is the rejection entry, that is equity share application account debit to bank account we have did here, third entry. And this is the combined entry, that is the bank account debit, share application account debit to share allotment account, and we had did here. Okay, so the amount will be here 1,20,000, and you can see here the working note of this. Okay, that is total minus rejected minus issued is equal to excess applications multiply with application money. The amount is here 1,20,000. We have to transfer here, that is 1,20,000. Okay, so this is the question which is based on issue of shares at par with oversubscription, rejection and pro rata allotment. And the next problem is issue of shares at premium with oversubscription, rejection and pro rata allotment. This is the more technical as compared to this question. Okay, fine. Now see the next problem. Okay, see here. Ranjana Company Limited has authorized capital of rupees 25 lakh divided in equity shares of rupees 500 each and paid up capital of rupees 15 lakh. So they have given authorized capital 25 lakh and paid up capital, that is 15 lakh. The company passed resolution that out of the unissued authorized capital 50% be issued at 10% premium. It was decided that price of the share should be called in installments as on application and allotment rupees 200 each, means here on application 200 and on allotment 200. Okay, and on first call is rupees 150 including premium. Including premium means here on first call it is the 100 and this 50 is here premium. Okay, applications were received for 1500 shares. Next, out of these, applications for 300 shares were rejected and allotted shares on pro rata basis among the remaining applicants. The excess applications money on these shares adjusted against allotment money due. So I have told you the second problem is the little bit different and this is the more technical. See here in this problem they have not given the number of shares issued by the company. They have given only authorized capital, that is 25 lakh and paid up capital, that is 15 lakh, and they have given the applications received, that is 1500. Okay, see here rupees 500 it is here face value, and as given the on application and on allotment is rupees 200 each, means here on applications 200 and on allotment is here 200, and on first call here it is 1000 and extra, that is 50, that is the premium here. And students, here the company passed here one resolutions and out of that here unissued, they to find out issued capital first we have to find out the how much the shares are unissued here. After that only we can find out here number of shares issued by the company. See here we have to do here many working notes. The first working note is here number of shares to be issued. We have to find out how many shares are issued by the company. Second one is amount to be refunded. Third is excess application money. Fourth one is allotment money received after adjustment of excess application money, and last one is the amount of premium and capital in first call. So let's start it and solve the first one, that is number of shares to be issued. See here solutions, and the first one calculation is the number of shares to be issued. For that we have to calculate like this, that is total number of shares means authorized capital is 25 lakh. This 25 lakh we have to divide with the face value, that is 500, and the answer will come here 5000. After that number of shares previously issued means here it is the paid up capital, that is 15 lakh, and we have to divide this 15 lakh with the face value and the final amount will come here 3000. After that number of shares unissued, we can find out like this, number of shares unissued, that is the difference between this 5000 minus 3000, difference is here 2000 means here number of shares unissued by the company, that is the 2000. Okay, so the next number of shares to be issued, okay, is equal to 50% of unissued, means 50% of this 2000, the amount will come here 1000. Means students, here the number of shares to be issued by the company is here 1000. This 50% of unissued are given in the question. See here, 50% to be issued means obviously 50% of unissued. Okay, so we have to do the calculation like this to find out the number of shares to be issued. This is the authorized capital, this is the paid up capital, and difference between these two is the number of shares unissued, and we have to make the calculation, that is 50% of unissued means 50% of 2000, the amount, the number of shares will come here 1000. Here company number of shares issued by the company is 1000. See here, and applications were received for 1500 shares, means this is the case of oversubscription. Okay, so the next one is the amount to be refunded. See here, amount to be refunded, we have to do the calculation like this, that is rejected shares, multiply this rejected shares with application money per share. See here, number of shares rejected by the company, that is applications for 300 shares were rejected. We have to multiply this 300 with application money, that is 200. Okay, so the final amount will come here. So the final amount will come here 60,000. Rejected shares multiply with application money per share, that is 60,000. Okay, this is the second one. Okay, fine. The third one is here excess application money. See here, the third one we have to calculate excess application money. For that we have to write this formula. I have told you in my previous practical problem, that is total minus rejected minus issued is equal to excess application multiply with application money. So students, here total number of shares, number of applications received by the company is 1500, rejected shares are as given, that is 300, and number of shares issued we have did first working note, that is 1000, and the total will become here 200, and application money per share as given, that is 200, and total will be excess application money, that is 40,000. Like this we have to calculate this problem. This formula is very important here to find out the excess application money. So the fourth one is we have to calculate allotment money received after adjustment of excess application money. See the fourth working note. For that, the amount called is equal to 1000. This is the number of shares issued. Multiply this issued amount with allotment money per share, that is 200. The total will come here 2 lakh, and less excess application money. See here, we did here, we find out here excess application money, that is 40,000. We have to subtract this 40,000 from 2 lakh. After that, amount received will come, that is 1,60,000. Okay, first we have to calculate amount called, that is number of shares issued, multiply with allotment money, that will come 2 lakh, and less excess application money, and that is 40,000, and difference is here 1,60,000, that is amount received by the company 1,60,000. Okay. Okay, fine. Now see the last one, that is amount of premium and capital in first call. The first call money, that is 150 per share as given, and face value is given here 500. So the amount of premium is here 10% of 500, means here in the question they have given, see here 10% of premium, means here 10% on face value, that will become 50 per share, means here the premium amount is here 50. Okay, so the next capital per share is 150. This is given in question, minus premium amount, that is 50, means here first call money is here 100. Okay, the total amount of premium in first call is first call is here 1000. This is the number of shares issued. Multiply this 1000 with 50, that is the premium, and amount will come here 50,000. Means total amount of premium in first call is here 50,000, and total amount of capital in first call is here 1000. This is the number of shares issued. Multiply this 1000 with 100, that is the first call money per share. Okay, so the amount will come here 1 lakh. Okay, this is the fifth working note, that is amount of premium and capital in first call, and the amount of premium is here 50, and the first call money per share is here 100. So total amount of premium in first call is 50,000, and total amount of capital in first call is here 1 lakh. So like this we have to calculate amount of premium and capital in first call. Okay, so this is the question which is based on issue of shares at premium with oversubscription, rejections and pro rata allotments. So students, if you want to solve the journal entries, you can solve it. Okay, thank you. If you have any query, please ask me in comment box. Subscribe my YouTube channel, like, share and also comment. Thank you very much.